talking first about the economy and what's been going on in the economy and its impact on commercial real estate. No surprise, we've had just an incredible recession we're starting to come out of. When we look at the job losses, when we look at the retail sales figures, when we look at the manufacturing decline, all of those have had just incredible impact on the demand for commercial real estate. When you think about the 8 million jobs lost, think about that in terms of what it means for the amount of office space being acquired. When you think about the drop in retail sales, you can think about the impact on shopping centers and strip centers. When you think about the household compression, and we can talk about this a little bit more, the impact on multifamily, that sort of is on a counter in some ways. But clearly the economy has had a tremendous impact on the commercial real estate market, and we've seen that in terms of rapidly increasing vacancy rates. Vacancy rates across all the different property types have increased pretty dramatically over the last number of quarters. We've also seen it translate into a drop in asking rents. So what's a landlord able to rent their space at? Drop in those rents again for pretty much every major property type. One caveat to that is that commercial real estate is a relatively long-term asset. So when you look at leases for commercial real estate, oftentimes they're multiple years, which tends to help it through down periods because not all the leases are rolling right in the throes of the recession, throes of a downturn. It also sort of mutes some of the downs on commercial real estate. It also mutes some of the ups because if when you're coming out of the recession or economic tight period, you don't have all of those rents rapidly escalating. So again, mute some of the downs, mute some of the ups, but we've been seeing pressure across the board on commercial real estate operations because of those increased vacancies and some of the compression in rents. Coming from my perspective, I tend to focus on the mortgage market. What we've seen there is with the recession, we've seen a dramatic slowdown in transaction activity, whether you're talking mortgage originations or property sales, just down dramatically. I think it's sort of 84% in 08, another bunch in 09. I've got the numbers here if folks are interested. But transaction activity just going to a triple, particularly in the first quarter of 2009.
Wait, so just explain so that everybody really understands.
Yeah.
When you buy commercial property, right, just like when you buy a house, you have originations, you finance that property. But unlike a 30-year mortgage, commercial real estate investors don't get 30 years. Mostly they get like 5, sometimes you get a little bit longer than that.
10-year would be sort of the typical.
So 10-year loans when you buy property, right? So 10 years goes by like that, right? Because sometimes you get the interim financing and then you close on the financing. Then you have to refinance. So what you're seeing now is when you came out of the 1999 sort of little boomlet of commercial property that happened kind of in the 90s, and people got those loans are all expiring. So what's happening now is you have to refinance those loans, so you know what's happening with the banks, right? It's impossible to get a mortgage if you're finding commercial real estate, and a lot of these loans are going bad. And so when you talk about compression of it, it's just not happening.
Well, there's